And we come back from the weekend, and the Bulls are on top of the hill, waving their clubs. Get back to your caves, Bears. You are no longer wanted here. We have S&P 500 futures trading up about 0.9%. We have oil trading down almost 6%. We have pulled well back from the $90 level. Oil trading around 83.50. We're going to get into what happened with what must have been our first de-escalation step, I would say, in the conflict in the Middle East in probably a good month or so. Couple quick news items to hit before we get into our earnings preview for this week. We are in the heart of the earnings season. We got a partnership between AT&T and D-Wave Quantum, QBTS. We have NVIDIA in talks with OpenAI for some financing for a data center or data centers. We did have SpaceX's Starship with its first successful test flight. Earnings this week. Microsoft, Meta, Amazon, Apple later this week. A few analyst ratings to touch on later in our show. Our guest today at 8:35 a.m. Eastern Time, Craig Johnson from Piper Sandler. We'll see what's going on with Craig from his technical standpoint. Let's get going here on pre-market prep, ladies and gentlemen. Here we go.
The volatility. The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right. Good morning, traders and investors. Directing your attention on stage now, Trade Station charts brought to you by Trade Station, born to trade. Chart analyze, customize, all in one platform on Trade Station. Thank you to Trade Station for sponsoring our charts here on Pre-Market Prep. Let's start off with our S&P 500 futures, which, as I said, are trading up about 0.9%, just over the 75.10 level. That corresponds with a SPY level around 738.90. Let me just make sure I am 745.50. Let's call it, after I switch over so easily on my Trade Station chart to 24-hour coverage. The Qs here trading around the 694 level. Let's go into USO and oil. USO trading down to around 127. Spot WTI crude trading around the 83.50 per barrel level. Let's do gold here. Gold trading up about 1%. And one more here, TLT, before we bring in Triple D. TLT here this morning, trade up 0.7%, about 0.75%. Let's see how Dennis's weekend here was. Triple D, how's it going?
It was good. It was good. Busy. Always they're busy weekends. You know, jobs during the week and jobs on the weekend. But you know what? We would do some resting and relaxing too, because we got to be ready for you on Monday morning here. Joel will be back tomorrow. So if you've been worried about the markets, this is the pre-Joel rally we are experiencing here right now. Getting ready for his great return here. Also, but BB's coming over apparently. So, this is the White House meeting here, talking over the war situation. I mean, de-escalation. We haven't seen it, Brent, here in quite a while. We were talking about it last week, Wednesday, Thursday, saying if this market gets any hint of a talk starting again, it will probably rally on it, because we haven't had that in a couple of weeks. It's been escalation. Well, over the weekend here, Saturday, we get a Reuters report here coming out here right now. Read to us, Mr. Brentster.
Iran has indicated it will stop carrying out attacks as long as the U.S. also refrains from striking. Again, you said it, Trip D, according to a Reuters report. We were kind of digging around to see if there was like one specific comment or, I think this was just it. I think it was just kind of a general, mediation.
Just unofficial. Like, you don't strike, we don't strike. You don't go, we don't go. Going back and forth there. So, I mean, that's a good thing. And I'm not surprised at oil. When I saw that headline, I was like, I'm going to get beat up because I had a little bit of oil long over the weekend there. That beat me up pretty good. But, in the STN think tank, we were trying to prep for everything. So we bought a bunch of Momo names. We actually bought some oil stocks. I'm like, that's kind of like a short. I did short some SPY. Overall, not a bad weekend, but wish I didn't have any oil longs here over the weekend because obviously if you're long oil, you're getting crushed here. USO down 6.87%, off the lows slightly. XLE pulling back here significantly as well, down at $1.50 here. If you jump into individual names, they all kind of move together. Sure. Exxon down 2.8, Chevron down 2.7, Conoco down 3.69, a little bit of higher beta, FANG down 5. But these stocks have been on really good runs. I mean, you think about just going into the USO. I mean, we went from 150 down to basically $100. Now we come all the way back to 140. So we're getting back to a point where we've got a lot of memory from before, a lot of resistance. And I do think if you've been sitting here on your oil longs and saying, yeah, baby, war, I think you just got your rally. I think it's here. I think I would be ringing the register. Obviously, it sucks to sell on down days, but if we get a little bounce back, maybe some, buy the dippers emerging here, I think, it's been mostly priced in. Like even on the headlines here now, when we were getting escalation, we weren't really rallying on oil at the end. Like the rally was exhausting already, and it wanted an excuse to sell off. And this Reuters report from Sunday morning gave us that excuse to sell off on oil.
I think you said it. I think that we were kind of looking for an excuse here.
Yeah.
If we want to go back to Friday here real quick.
Sure.
Some of the dead cat bounce on Friday really kind of like locked into place. When we were getting ready for the close, we were like, yeah, this dead cat bounce trade is kind of exactly where we want it to be.
Yeah, we were doing it Friday night, and I play the dead cat bounces usually on momentum name. Why? Because when they sell off, you get like a Nebius sell-off, and we play Nebius long. So NBIS, heavy down day, down 30 points on Friday. It's the kind of stock that retail loves. So remember, during the day, institutions run the show. After hours, retail runs the show. So that's why the dead cat bounce trade often works. What is the dead cat bounce trade? You buy the close, and then you're selling it after hours or, the next morning, the next day. Usually, you get a little bit of a bounce back because those retail darlings all buy the dip. I mean, that's what the mentality, the core strategy in the retail community is buy the dip. So when you've got the darlings of darlings like Nebius down $30, they're licking their chops after hours. They start coming in and they start buying the dip. And they started doing it immediately on NBIS. It didn't take Sunday night. It was up actually $2.50 before the Friday night even closed. And then obviously we get the headlines, the war, and it's the first stock going higher here, up 5.73%. So it's a nice trade. If you're up 10 points, and then I'd probably ring the register on it now because we did have a break of momentum there on Friday. But I mean, these are just, this is common sense type of trading here. So, the dead cat bounce often works. And the reason it works is that the retail trader just loves buying the dip, and the retail trader dominates the after hours and pre-market action.
And just to reiterate what you just said there, this was like, like we're talking about like this move right here. Like this is not a ton of you don't need a ton of upside here, and you don't need to be in this trade super long.
No, sometimes they just bounce immediately. Like sometimes it's immediate gratification. Sometimes, it's not. Sometimes you can get follow through. Like nothing works 100% of the time. People will always, selective perception is, a very strong thing. If you come in that trade and you get burned 4 out of 10 times, you notice the 4 times you get burned, but the 6 times you win. I mean, the best core strategies, have 52, 53, 55% win rates. You're never going to come in here winning 100% of the time. If you are winning 100% of the time, you're probably involved in the Trump administration, or that was a joke, or, you're one of those that is like refusing to take losses, because there's a lot of traders there that absolutely refuse to take losses, will come back eventually. I'm never going to take a loser. But in the long run, your portfolio gets full of losers by not taking losses. So we, the listeners of Pre-Market Prep are always savvy traders, savvy investors, and they're disciplined and willing to take a loss if the trade's not working out. And that's what you have to do.
All right, I am pulling up our next ticker here right now, QBTS. Shall we go to the QBTS AT&T partnership?
Yeah, I think to hold that for a second, it's a specific headline, but it ties in with the theme. We're a risk on market here today, so it's full risk on. The quantum theme in itself, has been really beat up. And I mean, these stocks have been punished. Let's just set the landscape here. So IONQ from 70 to 32 in the last couple months. Is there room to bounce? Yeah. Is there going to be a dead cat bounce in this from a longer term perspective? It could be, because the stock is so beat up. Now you get QBTS, chart looks absolutely the same. $32 down to 16, 50% off sale here. Blue light special, Kmart, whatever you want to call it. It's getting a pop here this morning though, because same story here. We've got the market here really strong, and and when you've got a risk on market, they go to the highest beta names. The quantum names are the highest beta names. So then we get a headline with D-Wave Quantum. And what's the headline, Brentster?
The headline is that AT&T signs a deal to expand use of D-Wave's quantum computing technology across its network operations. AT&T cut network optimization processing time from about an hour to less than 15 seconds using D-Wave's quantum technology. There were not any terms disclosed here, but it seems like AT&T loves the product, that one of the products that D-Wave is offering here. And actually, it's kind of weird, but I am not able to get a quote on QBTS right now. I wonder if there was some kind of switch over or something like that. I don't know. I'm just going to pull up the AT&T chart here.
Yeah, you can pull it up. It's up 7.65%. It's still there. I've got QBTS, so I'm not sure why your system's not bringing it up. Cool. It's trading up 8% here this morning at 17.45. But the quantum stocks are all hot. We know this is nothingness for AT&T, but QBTS is big. That's weird. That's not pulling it up. We'll figure that out.
I know. Right?
But all the other quantum names are up here too. Like IronQ is up 4%. QNT, which was the spinoff from Honeywell, it's been absolutely crushed. Stocks from 80 to 52. It's bouncing a little bit here this morning. The risk on names, all those loved names, and they're all down significantly. I mean, this is the market that's 1 or 2% from an all-time high. But it's funny, you look at individual stock names here, and a lot of the momentum names are down 20, 30, 40%. What has happened? Why is this, how can, some stocks be down 20, 30, 40% and we be at all-time highs? Because the rally has broadened out. We have new leadership. It changed on July 1st. The very first day of trading of the month, we started going from growth to value, and it hasn't stopped all month. And the value names have been picking it up, and that's the whole reason this market continues to go higher. RSP is right there, kicking at all-time highs. That's the same 500 stocks, just equally weighted here. But you look at other value names, this has been doing really well. Even Burke.B starting to show some life. The death of Burke.B after Warren Buffett obviously handed over to Greg Abel here, starting to show some life here. Maybe Greg's getting his mojo here because Burke.B is starting to perk up a little bit. But the value trade has come back. There's been a lot of trades, that we've been talking about in this market that, have not participated here. And, if we get a little bit of, life from some of these stocks that haven't participated, then that's what's going to take us to new all-time highs. So I think this value trade does have legs. I mean, the healthcare stocks just quietly making new highs here again. XBI is pulled back because it's kind of moving with rates, and TLT rates have obviously gone higher with the TLT going lower. But, maybe that's just, the little pullback that you want to be buying too. If rates do even indeed start to come back, if TLT starts to bounce, XBI will benefit from that too. But all I want to say is there has been quite a few names participating here that weren't participating earlier in the year.
What's the first stock that comes to your mind when you think about a stock that has not been participating here?
Well, you can jump into so many different names, but, like healthcare is really what I've been looking at lately. Like Merck. It just hit a 52-week high, MRK. I mean, it's not just being driven by Lilly anymore. The XLV was being driven completely by Eli Lilly. Bristol Myers, sitting there, new 52-week high. Like, these are stocks that you think, when everything's going really well, sometimes these, take a back seat. When the tech starts to sell off, where do they go? Value pharma. And so we've seen that trade really come alive here, especially since July started. If we look at Bristol Myers, started the month down to 55, 62. Great month for Bristol Myers, and the stock's up 15% in a month. Merck, almost same story. Started the month, well, it actually started around 126, then dipped later in the month to 120, but back up at 130. But, it's just broadening out. The market rally is broadening out. You got other stocks, even you go to like Amgen, AMGN, started the month 350, it's 376. So, it's not a matter of like the best stocks performing. It's a matter of the market just broadening out. The rally is getting stronger. Even on Friday, we were talking about, what an ugly day for so many momentum names. The RSP was up on Friday. So, I mean, that's just showing you the same 500 stocks, balance them out, equal weight them, and the market didn't do that bad at all. So if you're like screaming, like, man, this market's just terrible, it's not the market that's terrible, it's the momentum names that are terrible. But, and maybe that continues here. I mean, let's talk Micron here for a second, because we can't go a day without talking Micron. Here's a stock, the Michael Burry's is the top, and I believe the top for the year is in 2. I've been saying it at 1,200. I was wrong 3 days later because it hit 1,255. But I mean, it's pulled back since then, got down to 800, back up to 1,000. But even on a day like this, it was up at 955, 960 last night. We're starting to leak here again. Why? Well, if you've got higher or lower oil prices, technology doesn't really care about that. So maybe everybody just flying into the momentum names there this morning, maybe that's not the trade. Maybe that's the retail trade. But maybe when the institutional money manager comes in, he's like, well, if we're going to start getting lower oil prices, maybe I want some other types of stocks in my portfolio, because lower oil doesn't help tech, but it sure as hell helps all the other stocks.
Let's go to, I have a WSJ report here backstage that I am pulling to screen right now. We have a WSJ article from earlier. Let me know you can see it. Yes, you can. Yeah. NVIDIA in talks with OpenAI to guarantee $250 billion financing for data center. The project would be one of the largest AI computing hubs and involve power controlled by the U.S. government. Thoughts on this report here this morning? We didn't mention NVIDIA really. NVIDIA is I don't really think
not
NVIDIA
participating
was,
as much as you would like. NVIDIA's under the market here right now, up 0.6%. And it goes to my point. I mean, we can see this morning, and the Qs, are very strong here. But you also have a lot of stocks strong that haven't been strong. IGV's up 1.73%. A bit of the laggard rally continues here, even laggard tech stocks. ServiceNow, don't call it a comeback, but they had their earnings report, stock sold off, then it come back, and now it's starting to perk up here again. So ServiceNow not wanting to go down. We've had this market where technology stocks, software stocks have easily gone down. I would say in the last few days, they're trying to put up a little bit of a stand here. So, saying maybe it's not over here yet. And if we're starting to go into value, the value in tech is in software. Microsoft's like 17 times earnings here now. So we're moving into some of those other names. NVIDIA's reconnected itself with the chips. I know NVIDIA's only like 17 times forward earnings, and I own it. It's not that bad of a valuation. But, again, it's kind of reconnected with the chips to a certain extent. So when SMH is getting hammered the last couple of days, it's hard for NVIDIA to go higher here. And also AMD's kind of grabbed some of the luster from NVIDIA as well. So NVIDIA's just kind of in consolidation station. I wouldn't say it's necessarily a bad thing. I wouldn't say it's a good thing. Some people would say, it's a topping pattern, like Michael Burry probably. But I would say, it's just tired. It's had such a run the last couple of years. This has been kind of the year that it hasn't really been NVIDIA's year. It's been everything else. And, if we look at NVIDIA, start of the year around 190, it's 205. It's been fine, but there's been so many better places to be. So, obviously memory, some of the other semi stocks going. NVIDIA was the first to go, and it had such a run. When stocks go from 100 to 200, they go from $2 billion to $4 trillion in like a year. They got to digest that. It's just not that simple for those companies to continue to grow either at that type of market cap. It was one of the main arguments that I liked AMD over NVIDIA when AMD was 100 and NVIDIA was still trading around like 150. I'm like, I think there could be a catch-up trade with Lisa Su. And it wasn't people were saying, well, NVIDIA's P is 25, AMD is sitting up at 40. It doesn't make any sense. You can't just look at PE, though. You got to look at market caps, and the market cap growth potential for AMD is there. It's hard to grow a $4 trillion company. At the time, AMD was trading $200 billion. So I'm like, it's a lot easier to grow a $200 billion company than it is a $4 trillion company. And when you have Lisa Su behind the helm, she'll probably figure it out. And obviously she has. So that's, why that trade has materialized there. But you can't just look at PE in a nutshell and say, I'm going to buy all the low PE stocks, sell the high PE stocks, and rake it in, because it doesn't work that way. P works, in the context of everything else too. You've got to be analyzing, not just, P as by itself, but when you get stocks, that are trading 50 times earnings, there's a reason, because the growth is there. So I mean, you can't just look at it and say, I'm going to buy all the low PE stuff. The stuff has low PEs because the growth has slowed down. That's why it's there. That's why the PEs are low.
A news item that we kind of panned over on pre-market prep last week, just decidedly so, was Jensen Huang getting a X account. This happened last week. You can see on July 24th. Can you see my screen here? Yes.
His first ever tweet. And he's posted a second tweet? What's the second tweet?
He posted a second tweet.
What did he post?
Attackers have frontier AI. Defenders need a frontier AI ecosystem. The best open and closed models force multiplied by a global community. During the Hugging Face incident, closed AI blocked essential forensics and open AI wait frontier model helped contain the intrusion. The
That's all
reason
jargon to me, but it sounds like
Me
he's talking
too.
about cybersecurity.
The reason that I thought to bring this up is, just kind of talking about Nvidia's stock and where it's been or where it hasn't gone. I mean, remember that Jensen Huang is still a major top leader in tech. And at least we were reminded of this a little bit last week when Jensen Huang sent out this post here. It's like about how we need to be using higher AI, higher frontier models less, and lower frontier models more for everyday usage. And this was a bit of like a doctrine that him and a bunch of tech leaders sent out, kind of like, trying to raise the attention for the rest of the world.
Yeah.
And it was kind of headed up by Jensen Huang.
Yeah.
So, just remember that despite what NVIDIA shares are doing, Jensen Huang is still really our source for a lot.
He's
of
still
think
the
AI.
man. He's still the man. Even though Nvidia's stock has lagged in performance, the point you're taking is very valid. He is still the man. There's still no better company to mention. When you're getting a deal, you want to hear, with Nvidia here, it makes the stocks go crazy. I mean, he's still the man. There's still the pioneer. He's still in the pole position in this AI. So even though, maybe Lisa Su's closed the gap a little bit, it's still Jensen Huang that's a man, and he can move stocks. And I don't think you ever bet against NVIDIA here. Would I bet against NVIDIA at 17, 8 times? No, I'm long the stock still. So I think it's in consolidation station. Eventually, he may actually figure out how to grow the $4.5 trillion company. But talk about, who's the man too. It's been Elon Musk, but because he became the world's first trillionaire. But that is long gone. He is no longer the man here because both of his stocks are getting absolutely hammered here now. SpaceX has been going down for a while. It's down more than 50% from its high, 52-week high, which was set not even very long ago. We're talking about, about a month ago. And then Tesla just continues to go down here too. Both stocks not even responding to this morning's rally. SpaceX is down here again, down 1.56%. This is just multiple contraction happening here. It's 100 times sales. And the story, is obviously a cool story, and it could get going here again on the story, but it's just been ice cold here. There hasn't been a lot of headlines like deals coming or anything really cool from SpaceX. Yeah. I know they had the Falcon launch successful on Friday, but that's not going to move the needle for the stock. They want to hear deals more. Where are you justifying this $1.4 trillion market cap? That's been the trouble. I believe in the long run, Musk is going to figure it out, but I still think the stock's going under $100.
The think tankers are learning. We have some really smart people in there, asking some really good questions. And we've had a few people in the last few weeks trying to get into, I think, what Dennis does in his head a lot, what I try to do in my head a lot, which is like, what theme is SpaceX in? And we've had a few people ask in the SCN think tank, what bucket is SpaceX in? And it's you can see, Dennis just made the point. You can see what the stocks are doing. It's kind of doing its own thing. Tesla is the same way here. It's turned into its own story. It's not really trading with other names right here, for better or for worse. Elon Musk still has access to the financing that this equity and IPO got. So I don't know if he is unhappy with how SpaceX is done. He still has access to this money that he wanted to get.
Yeah. And you just look, I don't think he's overly concerned, with short-term stock performance here. He jokes, he even put a joke tweet out, it's fun to be a trillionaire there or something. I saw it last week. He tweets like off a storm there. But I don't think he's losing any sleep because he sees Tesla and SpaceX. And like, what are we going to do? Our stock's going to go down. Musk is not losing any sleep over any of this at all. And I mean, the valuations on both these stocks are crazy. But I mean, right now in the market, full stop, there's probably no two main tech companies doing worse than Tesla and SpaceX on a stock performance. Like, I mean, sure. Tesla's lost in the last 6 days from 400 to 300, just lost 25% of its market cap here. And then SpaceX is pretty much the same period here, over the last 4 or 5 days. I mean, obviously over the last 10 days, it never should have been at 220. So if you go from the 135, you're 115, 113. But again, you got, Eric Kroll comes on our show and he says like statistics are like 95% of stocks eventually trade through their pre-IPO price. So, I mean, this is like, just textbook IPO trading here that you don't get involved in the hype. And Eric Kroll called this one perfectly. You get involved and you're like, yeah, man, I'm going to get rich on this thing. let it simmer. Give it, if you want a little piece, it's okay to take a little piece, but don't put your whole size in there because in all likelihood, there's going to be a better price. And I think that's coming here for SpaceX. And Tesla, the same story. I mean, I sold my Tesla. I had it in my long-term portfolio. I pretty much top-ticked this because I had it in my long-term portfolio, for a couple of years here. And finally, I'm just like, it's stalling. You can just feel like it wasn't participating. It wasn't looking good on the charts here. But it wasn't just that. It's like just even, the market environment we're in, the economy's maybe not killing it here. And the sales in the recent quarter here, I mean, think about how gas prices, are elevated here. Think about, if you were ever thinking about getting an EV, now would be the time. You would think that would start
Seems
happening
like
with
it.
higher gas
Yeah.
prices, but that
Not
hasn't
really the
occurred.
case.
The
Yeah.
Tesla sales really weren't that great. So it's just telling you, there's just not that much interest here. And that's not good when you're trading 100 times sales or 100 times earnings. So a SpaceX 100 times sales, Tesla 100 times earnings. I mean, if you got the stock down in the 200s, do you revisit it? Probably. But right now, humanoid timeline with Optimus is not great. I mean, nothing's been moved up here. I don't see a lot of movement in the robo-taxi. Yeah, they're in Orlando now, but it's way slower. And its commentary, even from the call, sounded like he was almost disappointed with the progress there, which makes us concerned as well. So, I mean, that's why people are getting impatient with the story. Will there be a time to buy Tesla again? Absolutely. But I'm not going to catch the falling knife right now.
Let's go to our calendar for this week that was so lovingly and affectionately put together here by Michael Feehan. Give me just one sec. Pulling it up right now. Coming to your screen now. All right, here is our calendar for this week. I'll blow it up so we can take a deep dive in here.
Sure.
You just catching up on the chat a little bit, Triple D? I haven't been able to really follow along. What are they saying?
No, I know we're obviously always involved with the chat here. They're just talking. I just chatted up a little bit too on the side here. But let's talk this earnings calendar here. Okay. So this morning there wasn't much. AstraZeneca, we can take a quick look here. It's trading up $1, so not really doing much. And then you also had BKR reported over the weekend here, and it's trading up too. But tonight we get some big names. Celestica is probably the biggest one, CLS. This stock has been beat up pretty well, but we know, this is a company here that was going to benefit from the Google spend. Like it started taking off when Google said they were going to keep increasing CapEx. So I would think on a Celestica report here tonight, I would think they're going to beat the earnings. So you could say, well, it's come down 450, 300. Maybe the bar is even low here. This one probably sets up, depending on how today goes, this actually may set up as not a bad play to be long in the report, because I think Celestica is probably going to blow it away. They're probably going to be positive commentary because all these companies increasing CapEx spend, Celestica is one of the receivers of that money. So that helps them. So I think the report will be fine. It's a matter of, how good is it? How good does it need to be? So CLS tonight. Rambus also reports, which is also interesting. I'm long a little bit of Rambus just ahead of the report. I'll be selling it at the open. APLD also reports here as well. That's interesting stock. Nucor, if you want to get some steel in there, there's a stock. You want to talk about the broadening out of the market here? Quietly, right. Nucor has come all the way back down and not far from 52-week highs. So we know we relentlessly talk about tech, but here's, a value stock, what was a value stock at one time when it was 16 times earnings. It's probably moved up that PE a little bit here, but 247. Here's another example of the market rally broadening out with, steel stocks starting to look pretty good here. So that's the bear case here for the bears, meaning the bull thesis is that if this market continues to broaden out this rally, it's going to be hard to stop it from making new all-time highs.
Sure.
We got Craig Johnson early here, and he might want to jump into this conversation here because I know he's got some notes here this morning. So let's bring Craig in early here, and let's run that intro.
Cool.
Morning,
Craig. Morning, Craig Johnson. He is Chief Market Technician over at Piper Sandler. How was your week?
Guys? How are you?
Doing good, doing good. Do we got a little lag here? Let me see. Test 1, 2.
Week is
I think we do have a little lag.
Yeah, maybe a little bit of lag. Can you guys hear me okay?
Yeah,
we'll just wait a second and then let you go. Craig, make your point. You were going to open up the week,
I just said the week is going to be interesting. There's just a lot of companies, like you said, that are going to be reporting earnings, and it's going to set the tone. And clearly a lot of these large cap mega cap stocks are going to be very, very important tone setters for the week. And, Dennis, you were just talking about the steel stocks and the broadening out in this market. That's exactly what is happening, is a broadening out is happening in this market. Your equally weighted index is outperforming your weighted index at this point in time. And a lot of individual investors have been really focused on just the technology sector. I think now is the time to start looking at healthcare. I think now is the time to start looking at some individual financials to go and trade. I fully understand from a trading perspective that the juice has been in technology, but take Micron as an example. Nobody wanted to buy it back in November of 2024 when it was bottoming out on the charts, and now everybody wants to buy it now. And in my humble opinion, it looks a lot more expensive than I think a lot of people recognize at this point in time. And 6-7 times forward earnings from here, it's like easy money's been made. Let's go find some other places to go make the real money.
Yeah, I mean, that's the point that we're trying to make, earlier before you came on, is that the RSP is like kissing up and maybe going to hit a new all-time high here today. So you take the same S&P 500 stocks, equal weight them, and we are right there at all-time highs. Now, the S&P hasn't been bad either, but the reason the S&Ps are holding up, with Micron down 30% from the highs, with Sandus down 30% from the highs, is in fact that you've got healthcare stocks, you've got other stocks picking up the slack here. And I mean, everybody says that's how bull markets continue, is when you get the broadening out here. But let's take it back to technology just for a second here, because obviously, the easy money maybe even made in Micron, SanDisk, but it's still, these are the sexy story. This is what retail likes. They like technology. They don't want to hear about Nucor and steel. They don't want to come in here. It's not sexy here, Craig. So what's the next story that's going to ignite this market? What's the new sexy toy going to be? Or is it all going to be the value trade?
Well, I mean, I think some of the new sexy might be some of these biotech stocks, right? I mean, they can't get their juice out of buying, DRAM and playing AI. Just the recognition that the fact there's going to be a lot of consolidation that is going to have to take place in biotech. And there's a lot of these large companies that need to restock their pipelines at this point in time, and they're further down the road. So biotech is going to be sort of running on its own cycle at this point in time to go think about some of those names for sure.
And XPI is,
whether you go look at the XPI or the IBB or any of those or NBI, you look at any of those, all those charts have definitely been really pretty constructive charts. And you would think you're looking at an AI stock when you look at some of these names. And then, the other part, it's going to be a little weaker here this morning. But again, I'd come back and take a hard look at some of these energy names. A lot of people have written off energy, and a lot of these things, whether it's Schlumberger, whether it's some of the others, they've corrected right back. And that chart you just put up there, by the way, the XLE, that you put up there just a moment ago. I mean, in a chart world, that is just sort of a flag formation, right? After you make a pretty big move up, you create this flag coming back down, and that's where you usually then start another leg up eventually. So from my perspective, I'm very interested in energy, and I think energy is leadership right now. Some of these things like Chevron, Exxon, Schlumberger, you name them, they're really interesting setups on the charts.
Yeah, they've moved. They've come back a long ways from those lows here. And it's, again, obviously headline driven here. How much should we be paying attention to the headlines? I mean, we know, like, you've had escalation here overseas in the last couple of weeks, and now we get some de-escalation here over the weekend, and oil sells off a little bit. But, it is driving, investor sentiment for sure. The pumps, the gas prices go up. People are like, I'm not going to go on that trip because I don't want to, or I'm not going to take my boat out this weekend because it costs too much in gas. So, and I see it here. I'm on Georgian Bay, and the boats out there are like half of what it was last year. Like, there is a lot less people taking their boats out. They're still at the marinas. They're just not taking them anywhere because they don't want to pay the gas prices here. How much should we be concerned about higher gas prices in the war headline?
Well, I always like to say to people, let's follow the trend lines, not the headlines, because there is so much stuff that is following and happening out there at this point in time that we need to be looking at what the charts are telling us. And the message in what you see in the charts is just not consistent with where a lot of people think fundamentally this market should be at this point in time. We've been seeing multiple compression across the popular averages at this point in time. We've had everybody chasing the technology sector, and now you're starting to see healthcare improving. You're starting to see energy still continue to be leadership despite the headlines coming out of the Middle East. Again, this is where we're trying to make money. Again, Dennis, nobody wanted to buy Micron, SanDisk, any of these things in March and November of 2024.
No.
We bought all those names back then. They've been 10 baggers for us, which has been fantastic. And I don't say that to your listeners to brag. I just say, let's look at things that aren't moving. Like, let's look at something like Zoom that's made a massive base that nobody wants to buy. Okay. And you look at these kind of names. This is when I want to come buy them and sit on them for a while. Like, totally dead money for people. But again, Zoom isn't going away and they got massive cash flow. And if they just retrace half of this downturn, you got the winners that everybody's kind of looking for, right?
Let's talk software here, because it's not just a Zoom story, it's a software story. And we were saying this earlier too. IGV is trying to make a little bit of a stand here. You know, it's actually, it bounced back in June and then July, and it sold off the last few days here with the technology sell-off. But we even see like a ServiceNow, you know, starting to try to make a little bit of a stand here. Not that it looks, you know, constructive here yet, but at least it stopped going down. And in order to go higher, the first thing you got to do is stop going down. Some of these stocks have actually stopped going down. Like, let's even talk Microsoft here. If you want to talk Zoom, you might as well talk Microsoft in the same, you know, because we didn't make new lows here. You have Micron breaking down a new, you know, lows here in the last 3-4 months, but Microsoft still trading up here $25-30 from its June low. So at least it stopped going down. I mean, what are your thoughts here on software?
I think selectively, the IGV would be my way to ultimately sort of play software right now. I'm in agreement with you. I've certainly been nibbling at that myself. But also take a look at something like a Workday, right? Like, the bottom kind of looks like you're getting set in a Workday at this point in time. And again, I don't think a lot of people care. Longer term chart looks like a big bottom is getting made. And trade this one back up toward that 160-ish level. You could kind of almost call that, Dennis, almost a bit of a double bottom in here. I know it's a little bit lower here in 26 than it was in 22 at 23. But again, last time you bought it on these kind of setup in here, it was a pretty nice return. And again, these aren't things that are going to get AI'd, shall we say, right? Like, Workday isn't going to get AI'd and thrown out the door. Oracle looks a lot sketchier.
Oh my gosh, Oracle. What's wrong with Oracle?
I think the problem with the Oracle is they've been borrowing so much for AI that you've now had a head and shoulders top and you just broke the neckline on a weekly chart. So there's going to be more pain left to go for an Oracle in here on those kind of names. You can see that right there. You got a little more to the left. You got your left shoulder. You got a pretty big head, and you got your right shoulder. Classic of a distributional sort of topping pattern.
Yeah.
So more downside left to go for those guys.
I mean, I want to take the Oracle story and run with it because this is why Meta's now rolling over. This is why Google started rolling over. Right. It's CapEx. Like, Oracle was the first one to spend like a drunken sailor. And now Google says, well, we're going to start spending like drunken sailors. And Meta says, well, we're going to start spending like drunken. Even on the Google call, though, I think it was the CFO saying, or I don't know if it's CEO saying that there's more risk with underspending than there is overspending, because they were concerned about CapEx. I mean, these are bold, scary statements when you have a market that's punishing CapEx, you know, companies who are spending, you know, like that. So, I mean, this scares the hell out of if you're a Google shareholder. It scares the hell out if you're a Meta shareholder. But it sounds like they're not worried about today. They're worried about tomorrow, and they don't want to be left in the dust. So the decisions may end up working out here. But, I mean, you got these CapEx, you know, that's going to be increasing like crazy here. What does that mean for stocks like Meta and Google?
You know, here's the thing is, if you think about a lot of these companies, the hyperscalers, the ones that are investing heavily in AI, I mean, obviously Apple hasn't been investing heavily in AI at this point in time. I think the trade that's starting to play out is right now that we know that the second derivative, rate of change for the CapEx spending for all those companies is going to be decelerating. It just mathematically has to. And whether it's this quarter or next quarter, you know, you're going to get to a point in time where that CapEx number is going to come down. And then all of a sudden, there's the story on AI isn't ending, but the CapEx build out story likely is. And so it's going to become a rotation into not who's building out the AI, who's utilizing the AI. So one of the screens that Dennis and I have been doing and looking for and pitching to a lot of institutions is look for those companies that have the highest number of employees based upon their industry group, but yet the lowest ROE. Those are the companies that are going to be able to re-rate their earnings And if you can find charts that have been pretty beaten up that can re-rate their earnings that way, this would be a great story. So you come in and you look at some of these consulting firms that are going to benefit from this AI. Productivity per employee is going to go up. They may not have to lay everybody off, but productivity employee is going to go up from the AI. And that's sort of the transition I think is happening. This is similar to what you did back post the Y2K spending binge that took place back in 2000. You saw a period of time where the equally weighted market did better, tech was weaker, and you ultimately saw, call it, other companies outside of tech do a lot better because they were starting to implement the internet and drive efficiencies. And we're going to do the same thing again for AI.
Mm-hmm.
What are those? Like, do you have a couple of those companies here that are showing up on the screener? Because this is a really cool exercise here, because we naturally, the market's been thinking of consulting companies saying, crap, AI can do all this consulting. We don't need consulting companies anymore. And you're looking at the opposite, that these consulting companies are going to get more efficient because of AI. And if they can work with half the staff, they're going to make a hell of a lot more money.
That's exactly right. And, some of those companies, I'm just going to pull something up over here. But some of those companies, I would tell you, would be things like Arthur Gallagher, where you've got a ton of companies on the insurance side of things that they got a lot of employees. Their ROEs are quite negative, but eventually they can be the one of these AI winners. Let me see what else I had in here. Let's also think about even Microsoft could fit into this category to a degree. Tons of programmers use more AI. They could also benefit from this. I'd also pointed out AbbVie, JP Morgan, J&J, even Bank of America. A lot of financials, Dennis, could fit into this category where they can be leveraging a lot more AI. In fact, when I screen through the industry side of it, IT services, insurance, healthcare providers and services, hotels, restaurants, professional services, capital markets, banks. These are all fairly heavy employee industries that can benefit from higher productivity and higher ROEs.
This is such an interesting point, because we don't think of the financials as an AI play. And, we've been even asking, what's going on with the banks? Like, they keep going up here. But if they have an AI efficiency trade that you're talking about, maybe they're the ultimate AI efficiency trade, then they're kind of seen as AI companies here too. And I've been even trying to render what's been going on with the Canadian banks. Canadian banks just been exploding higher. Royal Bank's up 70% in a year. It usually go up 7% a year. It's up 70% in the last year. And you think, wow, there's tariffs coming in. The Canadian economy isn't doing that well, but the stock's just exploding higher here. Or why? Maybe it is AI efficiency. Maybe, Craig, you're onto something.
Well, it's what we did with the internet, right? And we're going to do something similar again with it this time around too. And so you can go out and use your large language model, do a similar exercise to what I did, and you can sort of identify some of those takeaways in here. But, Dennis, another topic here we got to talk about too is we know that quantum computing is coming. And if you go through and you look at the roadmap of quantum computing, what a lot of people don't realize was passed back in 2024 was some new quantum proof algorithms, right? So therefore, we're not going to get our passwords stolen. We're not going to get them to use quantum to break all those things down. So that is another trend that is coming. Here's the thing is, though, most corporations haven't even started this process yet. And we know that quantum is available as a service on demand through IBM at this point in time. But we need to spend a lot on, say, the Palo Altos of the world, the CrowdStrikes of the world. We need to see a big pickup in spending there. But the deployment of these sort of quantum-proof security algorithms, Dennis, you're going to need a lot of consulting firms to come back and help do this, because the expertise in corporate America is not in-house to do these kind of things. And when I talk to the experts on this, it's probably a 2 to 3 year project. And that lines up pretty well with when we're going to really see quantum computing coming online, which is probably anywhere from 2027 to 2030. And again, corporations are going to have to shift their AI spending, away from that build out to getting ready for that next sort of Y2K event. around the RSA tokens and around those security protocols taking place. So, by again, another definition, Dennis, you will have to see this AI binge because there's only so much cash out there. It will have to shift. And when it does, CrowdStrikes and these other companies will be in great positions to benefit.
That's where the money could go. So maybe the money's not going to continue to go to the Microns and the SanDisks, which have obviously benefited. That's why the stocks are up 1,000, 2,000% the last year, because everybody's just throwing money at them like crazy. But it could move on into some of these other things here. So you still like cybersecurity then?
100%. I think cybersecurity is going to be your next, or I should say, the first part of the roadmap for your quantum rollout will have to be cybersecurity names. And you're going to get some pullbacks in Palo Alto. You're going to get some pullbacks in Fortinet. You're going to get some in CrowdStrike. And these are ones that you're going to want to be buying on some of these pullbacks.
The best names in the group. You stay away from some of the smaller names in the group. Do you stay with the best, like the CrowdStrikes and the Palos? Could you get down into like a SentinelOne here, or it's just too hard of a trade to buy the laggards of the group?
I think it's such a fragmented industry, right? So if you're going to play the Zscalers, the SentinelOnes, and those, again, I don't know anything, but what I would say is the consolidation plays. Those could be consolidation plays into the business, into that particular market. Because if you look at a CrowdStrike and a Palo Alto, I mean, they still are such a fragmented industry. They are still very underpenetrated into this entire thing when you think about their entire market share right now. Like, there's going to be a lot of market share gain that's going to have to get made by these companies. So the small guys probably get bought. The big guys are probably where you want to put the bulk of your positioning and trading in some of those names. But there's a shift coming. It doesn't have to be just about playing Micron anymore.
Yeah, like you said, the easy money and the obvious money there has been probably made. So now we got to be thinking a little bit deeper here and starting to go into some other names too.
Dennis, I sit here and I watch all the shows all day long. Over here on my screen, you can't see. I've got all the channels on a huge TV, and I watch these things. And it's like, I can't believe I saw just last week somebody coming on and saying that Micron is a fresh money buy. I'm like, where were you in 2024?
When it was $80.
Exactly. Right? Like, where were you on some of these charts? And it's like, I just can't believe. I mean, but again, what are a lot of places going to do, right? They're going to continue to buy these stocks until they're broken on not only an absolute, but a momentum basis. And they're going to run the car right off the cliff. And that's what they always do because they're afraid of underperforming. And this is where the pain really comes in for the individual investors because they buy into the Kool-Aid here. And then they sort of run these things and they keep buying the dip, but it isn't the easiest way to go play it and the easiest way to make money right now. I'd rather buy something in healthcare like PODD, pull up that chart to the very lower end of a trading range. It's already been beat up. I don't care what happens to GLP-1s. I don't think people's needs for diabetes and, blood sugar testing and all that stuff is going away either. I mean, look at that, right?
Been killed. Again, this is just, rotation out of certain names. There's no sexy story in Insulet here. And, stocks went from 350 to 150. And, some people worrying, and I've worried about it too. You don't know where AI is taking us here. Maybe it cures diabetes, but, that could be a long ways down the road.
I don't think so. Let's have a conversation when Apple comes out with a watch that can do it for us. But right now that doesn't exist. So a lot of these other opportunities, and again, this is a market that's also transitioning from one that's been all about growth to one that's becoming more about value. And when you look at a simple ratio chart of growth versus value, all the traders out here that are tuned into your show have got to pay attention to the style drift that's happening in this market toward value. I mean, even things like Best Buy, where there's absolutely no sexy time story going with it, actually look like great downtrend reversals.
Yeah.
And again, it was just about making money. As traders, we don't care. We'll trade any of these things. We just want to make money.
But this is such a good point you're making here. Best Buy. When's the last time we mentioned Best Buy on the show? Maybe when we reported earnings last quarter. It might get one mention every 90 days here. But here's the stock. Just went from 55 to 85 straight up. I mean, the dividend, we were talking about when it got back down, it was like 6%. When, you get a dividend of 6%, P's like 9 on the thing. I mean, it was the ultimate value trade. Target, too. I mean, Target was the same story. PE got down to like 10, 11 times earnings. Stock was $90. Dividend was 4.5%. And everybody's like, well, it's going out of business. Well, maybe it's not.
Right. They're not going out of business. I mean, there's people that are still going to shop in the stores, still do those same kind of things. And you go back and you look at those kind of charts, Dennis, and then you come back to like a Zoom or a Twilio, or you come back to some of these other things that have been so out of favor.
Yeah.
And it's like you're really pushing on a string right now to go back and continue to buy some of these other names. I mean,
Yeah.
I'd rather buy some of these things down here where I'm not fighting people and I'm watching it every 30 seconds on some of the shows.
Well, the value guy's been continuing to buy those, but if the value trades start to get momentum, then the momentum traders could come into those value trades and could really ignite it too. That's what we saw happen, obviously, with the software names, a couple months ago when they got oversold, and then we had this ridiculous rally, even in Oracle, going from like 150 to 250. It ended up being an ultimate selling opportunity. But I mean, we know when momentum starts going, hell, the algos don't care what the hell it does. When the momentum gets going, they'll jump into value trades too as momentum plays.
Yeah. Now, something else to show you guys too to think about, right? So pull up a chart of the S&P 500. Okay.
Yep.
And when you look at this over the last, call it year, if you could, right? So one of the things that I have been watching in the S&P 500 over the last year has been, and this chart doesn't show it on your scale quite as well, but there's been pretty much a 42, 44 day flip-flop between lows to highs, highs to lows. And that has happened for about 4 or 5 times now. And, Dennis, I got to think this is some of the, the algos, maybe the Claude trader guys out there that are building these trading patterns and algorithms. But it's been trading at a pretty consistent sort of 42, 44 days.
What's that mean? For just like, what do you mean by that?
If you're going to hit your next low, it probably, if the pattern continued, would happen somewhere around the 8th, 3rd, 4th of August is where you would probably hit your next low.
And then we go back up, make a new high.
Well, yeah, you would go back and try to make a new high after that. But what you've got when you look at this chart right here, Dennis, is just a big consolidation. And everybody keeps asking me, Johnson, when are you going to go raise your 7,500 target on the year? And I said, when we make a new high. I mean, it has been 40 plus days since we made a new high in most of these popular averages. And until we start making a new high again, you have to conclude that more time is going to be required. And we're going to have more of a consolidation in time than anything else right now. And again, I don't think enough people are paying attention to the fact that you're not seeing some of these popular averages making the new highs. Let me see if I got a chart of this to show you here, Dennis. Give me one. Because I think it's an important thing for traders to be thinking about in some of these sort of patterns here. Yeah, right here. Take a look at this. Actually, it goes back over the last 2 and change years. Here we go. Let me see if I can share this with you guys.
Yeah, just a little plus at the bottom.
Yep. Let's share the screen. Perfect. And then let's go over here. If you guys can see this.
We don't see your screen here yet.
To
how about now?
Plus.
Nothing yet.
Yeah, you got at the plus and then share screen.
Share screen. And share the screen. Your browser has blocked screen sharing.
Oh,
you got a firewall up.
We can.
You've got a firewall up.
Okay.
You could, Craig. You could like email it to me, and I could share it with our community a little bit later. But
sure.
Yeah, all good.
Yeah, I'll send it over to you guys. But
yeah, send it over to us. We'll show it. I can even tweet it out later.
Yeah, Dennis, if you go back and look a little further on that chart you had earlier, and you go back and you look at that, go back and you just sort of look at where your lows came in, where your highs have come in over the last couple of years, and it's been pretty much every 42 to 44 days. And
that's interesting. I've never heard that, so that's why I was like, I wanted you to expand on that. That's a cool little stat there.
Yeah, let me see if it'll share a program. Here, hang on. So share slides. No. Let's see, share.
Firewall might block everything.
Screen. Let's see here. I don't know why my browser would block it. I've done this with you guys before, so
Yeah.
I'll send it
All
over
good.
to you guys, and you guys.
Okay, yeah, email it over
Cool.
and we'll go from there.
Read
Craig,
it
we
out.
always appreciate you coming on. You know, the time you take here and your research is great. You know, obviously, keep sending along your research notes because they're great as well. So, Craig Johnson from Piper Sandler, Chief Market Technician, with us here again. Craig, we'll get you back on real soon.
Thanks, guys. Bye.
All right,
Thanks,
have a good
Craig.
one. Thank you.
I mean, agreeing, you know, with the broadening out, the value trade, like, and we keep looking, you're like, which value stocks? You just gave us two of them, like Best Buy. You know, when's the last time we looked at that thing? You know, blasting off. But
Great
maybe
example.
the best point, which we were making, you know, like 4 or 5 months ago, was, you know, the PE contraction and the PE expansion on the low PE stocks, the high PE stocks. The best example of this might be Walmart versus Target. Because Walmart, I'm like, it's trading 42 times earnings. It's $135. Doesn't make any sense at all. And Target was trading 11 times earnings. Doesn't make any sense at all. And if you were to just blindly shorted Walmart and bought Target back at the beginning of this year, you know, like especially if we've got the timing right, if you were to do it in February, it'd been perfect. I mean, you'd be up on the short 20 points in the short on Walmart, and on the Target long, you'd be up about 40 points, 40%. So, I mean, this is completely two businesses that are very close to the same, completely showing you that this has turned into more of a value market. We buy the low P stock, we sell the higher P stock. This is why SpaceX and Tesla are really struggling in this market too. It may not just be company fundamentals here. It's the whole movement that this market just doesn't want to pay extreme multiples. And we look at the moves in Micron SanDisk. Well, those weren't high PE stocks. Those were actually low PE stocks getting driven by earnings. Right. So we kind of moved into this market here now that is actually paying very close attention to PE. And it has been doing it for quite a while here. In some cases, like Target, it's been doing it all year.
And under the radar. I think that's kind of like a huge point here is where I was trying to think, you know, like, is there going to be a moment? Have we already had that moment where like something clicked and we were like, oh, value is sexy again? I don't really think we've had that moment, but then we look at the Target chart, we look at the Best Buy chart, and maybe it's kind of already happened in the background, I think.
Yeah, a Pepsi, Coca-Cola, you know, like Pepsi's multiples always been a little bit higher. Pepsi's been selling off here too. So, I mean, there's, you know, case and examples of this that we've just kind of moved more into this type of market that actually is starting to pay attention to valuation. You know, we didn't, you know, for years pay attention to valuation. It's all about growth at any cost. You know, Kathy Woods made her whole life, you know, just buying any growth stock, no matter what the valuation. But, you know, ARKK, you know, has been struggling for a long time here too. It's done okay, but even this year, think about how strong we've been this year. You know, the Qs, you know, are up, you know, ever since April, we've pretty much been straight up. There's ARKK sitting down there not far from a 52-week low again. I mean, she again buys companies at any valuation, you know, and this high PE trade just hasn't worked. I mean, that is, you know, a case in point is right there. ARKK's long-term performance lets you know that when you're investing in companies at unreasonable valuations, you're going to underperform the market. And here she is. We've had the greatest bull run here since 2020, you know, 2026. And ARKK is, you know, 50% off its 52-week highs. You know, maybe it had no business being up at 150, but even looking back to 2020, it was $60, 73. I mean, the Qs in that same time period from 2020 went from 200 to 700. So if you were to just blindly just bought the index, you'd be up almost 300% in your investment. You blindly buy ARKK and you're up like 20%, you know, with all this active management, just massively underperformed. So valuation has mattered here for a while here now, but it's starting to matter even more.
It gives me some measure of relief hearing you say that, because it makes me think that this is a, like, whatever this is, but like a more appropriately functioning market.
Yeah, like we've been saying, the market is starting to make a hell of a lot of sense. We've been saying that for a while, Brentster, too. I mean, from a fundamental basis, you know, maybe even the Micron and SanDisk moves made sense. Like you can say, well, how can a stock go up 1,000%? Makes sense. Because the earnings just exploded higher. You know, you got the CapEx spend is just throwing money at these companies hand over fist. You know, the other stock, if we're really going to make this argument here that the stock market needs to become more logical, is Apple. I mean, really, when you look at Apple, the growth hasn't been there for years unless they're really cooking something up. And we know Tim Cook isn't going to be always doing the cooking here anymore. I mean, here's a stock at all-time highs, yet the stock trades like 34, 35 times earnings. I mean, you've got other similar tech trading 20, 25 times earnings that has way better growth rates. The Apple really hasn't made any sense for a while for it to be trading up here. But, you know, they just, you know, keep forgiving the stock. It has the cash flow, unless you're thinking it's AI efficiency, which maybe they're going to benefit from AI efficiency. Maybe all companies are going to benefit from AI efficiency. And that's probably why the S&Ps really struggle to go down too. It's just a side note, just thinking out loud here, is if you get AI efficiency trade coming for all stocks, which Citrini was talking about earlier this year, I mean, that's what's going to propel the S&P to new all-time highs by the end of the year. Or maybe sooner.
Here is our 9 a.m. news dump, by the way. Perfect timing.
Oh, yeah, let's go check it out.
See if there is anything exciting to report on at 9 a.m. I am looking through. We do have Rigetti expanding its collaboration with HPE and Pittsburgh Semi-Computing Center. RGTI expands collaboration with HPE. It says, do we have terms here? Not really. It looks like there are no terms disclosed for this deal, but we do have RGTI moving, maybe responding to a mention with HPE there. We have Newegg business shares, a real world AMD 405 series deployment story. Oh, that's fluff. Never mind. Ignore that I said that. Smith Micro SMSI expands its SafePath platform. Another press release hitting there. CBRL, Cracker Barrel CEO succession plan. CBRL, David Deno is named new CEO effective August 10th. Julie Massino will step down as CEO and director at CBRL.
I think you've got it covered pretty well. I just went through them all too. The highlight was RGTI. That was one that was moving off of that 9 o'clock news dump. And, it's obviously just kind of leaked it back here too. The algo's just instantaneous, like, oh my God, we see RGTI and it got a deal. And then go take it to there. And then, it starts.
A couple more here. Synopsys, SNPS, a couple press releases here, name dropping Intel, Foundry Fast Track customer readiness, and also Synopsys with another press release here. They announced they are advancing agentic AI chip design with AMD and Microsoft. These initially, without clicking into the releases here, these seem a little fluffy here. We also have a Cognizant CTSH announcing an expansion of a partnership with Anthropic. They will be embedding Claude in Cognizant's industry platforms. CTSH.
Pretty busy.
That was a busy 9 a.m. news dump. So you've seen pre-market prep. You've seen us do these 9 a.m. news dumps for like a week or maybe a week and a half now. Sometimes they're busy. Sometimes they're kind of just nothing. This was a little bit more of an exciting one. Yes, maybe a few sort of fluffy press releases in there, but we're all caught up on our news from the pre-market. We're caught up on our news from between 8 and 9 a.m. when we were live on pre-market prep. We're now caught up on the 9 a.m. news. We're all caught up on news here. So we're going to go into STN Think Tank and we're going to get ready for the open here with Triple D and Trader Prad, who normally joins us during the week. He said he's not trading today. He said he's given himself a day off. And I said, good for you,
I do that
Brad.
every once in a while.
Yeah.
I need to do that more often. I never give myself a day off. I need to start giving myself days off here too. But you guys need me here. What would you do without me? Yes,
and you love it
without me.
Yes, we really would. Well, that's going to
Joel will be back tomorrow. So
and
stop
Joel will
worrying.
Be back tomorrow.
The markets are going to be okay. Actually, if we look at the indicator, the markets might sell off when Joel comes back here because the official Josh Walters stats is that the market goes up when Joel is gone, which I cannot believe. I still challenge the data. I think the data was cooked.
Joining us at 10 a.m. in the STN Think Tank is Hendy Sasanto. He's from Gabelli. This was the guy that I talked to last week, and he called Microsoft the mothership for AI to go to prosper. So we're going to hear what Hendy has to say for us at 10 a.m. Eastern time. Tomorrow on Pre-Market Prep, we are going to have Thomas Brown. I believe this is a new guest. We'll have Joel back on the interview duty. All right, folks, we'll see you over in the STN Think Tank. Triple D and I are jumping over there now. Thanks for joining everyone today. We'll see you tomorrow. Thanks for watching Pre-Market Prep. Hit like, hit subscribe. Join the STN Think Tank at StockTraderNetwork.com.